What's going on? My name is Hunter. In this video, we're going to be going over my analysis and my thoughts on Coca-Cola stock. Is it worth investing in? Am I invested in Coca-Cola stock? We got a lot to look over in this video. So before I go any further, all I ask that if you enjoy dividend stocks and you enjoy value investing, you make sure to subscribe to the channel and you turn on post notifications for videos coming out every other day. I'm always trying to provide the most value that I can, talking about dividend stocks, passive income, value investing, dividend growth investing, all of that good stuff. And actually, my next video, which will be coming out on Friday, December 17th, is going to be a video exploiting my entire portfolio. I'll show you how much I have invested in my M1 Finance portfolio, how much my dividend income is expected to be for this next year, and all that good stuff. So make sure you stay tuned for that and you turn on those post notifications for all that good stuff. But enough of that talk, let's get into this video. So what we're talking about is Coca-Cola stock, ticker KO. Now, do I believe in this stock long term? Of course I do. I believe that Coca-Cola is a great company and I don't see them failing by any means. But we'll talk about my deeper thoughts on this company and why it does not have a position within my portfolio. Now, I'm not saying that just because you invest in Coca-Cola and I don't does not mean that you're making a bad investment. I just would rather put my money in different places, and we'll go over why that is. Over the past year, Coca-Cola stock is up 7.89%. Very volatile, going up and down, and then kind of going all over the place, Over the past 5 years, the stock is up 37.8%. Now, they have a forward PE ratio of $25 not $25, just 25.19, and an earnings per share of $2.29 per share forward. Now, they pay out $1.68 per share every single year in dividends with a yield of 2.91%. Looking on some different things, they do have some solid dividend grades, A on dividend growth, but that's a little bit suspicious just because the 5-year growth rate is only 3.71%, a dividend yield on a B minus. Now, the only reason that this grade is so good is because of the dividend growth streak, which Coca-Cola is a dividend king, meaning that they've been increasing their dividends for the past 50 years. Now, they have a B minus dividend yield, 2.91%, dividend consistency A plus, but a dividend safety of a C plus, and that is because their payout ratio is roughly 73%. Now, that is just one more factor that kind of keeps me on my toes when it comes to investing in Coca-Cola's dividend stock. Now, what we'll see right here is they have a market cap of $250 billion, which is huge. A very, very low beta. 0.69 is the 5-year monthly beta. So that kind of signifies if you're looking for lower growth but more of a safer investment, Coca-Cola might be your best bet. And personally, I'm aiming for more growth. And that is kind of the main thesis as to why I don't own any Coca-Cola stock. Like, don't get me wrong, I love their beverages, I love Coke. And I think that they have a great future. Powerade, they just went through that Body Armor acquisition, which we will talk about in a second. But I just don't think it's a good fit for my investment thesis and my investment journey looking forward. Now, looking at some more things, the financials on this company, they're good. Don't get me wrong. They're not terrible, but they're a little bit all over the place. Revenue's kind of up, down, up, down, up. Okay, net income right now is sitting at not the highest it's ever been, but some of the highest it's been. Balance sheet, pretty solid. The balance sheet, 87 million in assets compared to 66 million or billion in liabilities. That's a pretty big number. Okay, cash flow right here. Free cash flow is looking very solid, increasing year over year, which is, I really like to see that. Props to you, Coca-Cola, for that. But that's not going to be the number one reason why I'm going to invest in a company. Looking at Morningstar analysis, they gave them a fair value of $59, saying that Coca-Cola is trading at a 2% discount. We know that they have a huge moat. It's Coca-Cola. They really don't have much competition other like Pepsi and different companies like that. But let's talk about the institutional and the analyst insights. Institutions continue to buy. They've bought $7 billion more than they've sold over the last 12 months. You can just see the institutions are more bullish than bearish. But it makes sense. It's Coca-Cola stock. They're going to be like that. Now, it says Coca-Cola is trading below their intrinsic value of $96.90, which is incredible. And compared to the market and their industry, Coca-Cola is good value, trading at 28.45 times earnings compared to the US market average of 36.37 times and the non-alcoholic industry beverage average of 39.31, which is pretty solid. And looking on some more stuff, the price targets are pretty solid. 7% upside, giving it $62 a share. They have a high of 65 and a low of 55. Out of 8 analysts, 6 are saying to buy, 2 are saying to hold, and 0 are telling us to sell. Now let's look at Coca-Cola's financials for the past quarter. Net revenues grew 16%, operating income grew 26%, margins are increasing, their earnings per share grew 41%. That's a huge number. Net revenues are sitting at $10 billion for literally one quarter. That's an insane amount of money, right? That's incredible growth. Now, their dividends, pretty solid, 42 cents a share, and they're making 57 cents per share. So leaves them with about 15 cents per share to reinvest back into the company and expand Coca-Cola. Now let's talk about the Body Armor acquisition that just went through. What we'll see right here is Body Armor bought full control or got bought out by Coca-Cola. Now Coca-Cola had invested a 15% stake in Body Armor in 2018. And then this past month in November, they bought the entire company for $5.6 billion. And it's going to give them more market share in the sports drink category, although PepsiCo's Gatorade has 70% of the entire market share in that. So a lot of investors are sitting there like, was this even worth the $5.6 billion to get maybe even 30% of the market share in this industry? And this kind of digs deeper into it. So is it good or bad for this business? What they're talking about is here is Body Armor's drinks. Sports drink, Body Armor Light, Body Armor Edge, and Body Armor Sport Water. So they have a lot of different products, which is very solid stuff. But could Coke afford to do this deal? And looking at their free cash flow, their cash right now, their revenues, different things like that, the size of the company, overall, the answer tends to be yes. They could definitely afford to do this deal, so they weren't taking on a massive risk. But let's look at the pros. So ever since Coke stepped in with Body Armor in 2018, they've upped that company insane, giving them a compound annual growth rate of 77%. That's a huge number. Body Armor was only making $250 million in sales, and now they're making $1.4 billion in sales. That's a huge number, okay? Now looking at some more stuff, they've increased their sales by doing this. They should increase their sales by roughly 4%, which is going to give them some big numbers. And they're most likely not going to face any major integration issues because they've been working with Body Armor for the past 3 years now, which is very solid things. But they're talking about, is it worth it to enter Coca-Cola stock? And this article says probably not, and to wait for slightly lower levels. Now, a lot of investors are also talking about, should we even be buying into this company because of the simple fact that, should we be buying into this deal because they're only going to be getting a small amount of share in this, which is not that good. And right now, Gatorade controls roughly 68% of the U.S. sports drink market, and Pepsi's Powerade, Coke's Powerade has roughly a 22% share, and that also includes Body Armor. So talking about this, is it worth it for them to go with this? Personally, I think it's a great deal long term just because of the simple fact that it's going to add more revenue, hopefully more profits, and bring in more innovation into this company, which Coca-Cola does slightly need. I think they need some more emphasis on their company, some more growth to make them an attractive investment. Now, this article right here says Coca-Cola is a strong buy as it continues its robust growth, which we saw. These numbers are no joke. These are incredible growth rates. Don't get me wrong. I'm not sitting here saying Coca-Cola is a terrible stock. If you invest in Coca-Cola stock, that's great. That's incredible. They have a nice dividend yield, but they have slow growth, and we probably have different investment theses. If you're a dividend growth investor and you're buying into Coca-Cola stock, I'm not saying it's a terrible investment, but I think personally, remember everything I say is not financial advice, but I think you do have better utility in your money elsewhere in other dividend growth stocks. Now, another thing that kind of keeps me away from Coca-Cola stock is the returns that it provides. It only has like a 3% dividend yield. This past year, it's up only 8%. The S&P 500 is absolutely crushing it on the 1 year. It's crushing it on the 3 year. It's crushing it on the 5 year. Just have to wait for Seeking Alpha to load. You can see, and on the 10 year, it's also crushing it. And Coca-Cola has kind of passed that phase where it's going to have explosive growth that Warren Buffett experienced. The company is I'm not saying the company has plateaued, but it's so mature right now that would be very difficult to see Coca-Cola stock catch up. And that is kind of my thesis as to why I am not invested in Coca-Cola stock. I don't think it's a bad stock. It's making positive gains. It's providing cash flow for investors as a 3% dividend yield, and it's giving good value. But I think personally that my money is better invested into other stocks or ETFs, and that is my analysis on Coca-Cola stock. So if you did enjoy this video, make sure to subscribe to the channel, turn on those post notifications for videos coming out every other day. Make sure you stay tuned because this Friday is going to be a portfolio reveal. I always like to see what you guys are doing, what you think. So if you like Coca-Cola stock, if you don't, if you're mid, based on it, leave a comment below. I always like to see your guys' opinions, your guys' thoughts. Thank you so much for making it to the end of this video. Check out M1 Finance. You can look at my portfolio, and you can also, if you use my link and sign up, deposit $100, you and me both will get $50 free. It's free money. But again, thank you so much, and I will see you at the next video.